Welcome to Do You Ever Wonder? The show that brings you answers to many of the questions that you may have, but with no one to ask. Do You Ever Wonder is hosted by Mike Haltman, CEO of Hallmark Abstract Service, who, like you, has always been deeply curious about a wide variety of topics. Each week, Mike will be speaking with guests who are leaders in their field and who have inspirational stories to tell. So now, sit back and enjoy the show.
Hi everyone, Mike Haltman. We are here for another episode of Do You Ever Wonder? And today we do have an inspirational story to tell. It's a story of risk taking, of following a dream, of reaching for the golden, whatever a golden thing it is. But we're here with a mid-Atlantic state transplant. He is a commercial real estate icon in training. He's got a lot of initials after his name, and I want to talk about that. He's a managing director at BKREA Estate Advisors, and for those who aren't familiar, BK stands for Bob Knakal. I had done an interview with Bob here before. He's kind of considered the GOAT of commercial real estate, but let's welcome Faraz Cheema. Welcome, Faraz.
Hey, everybody. Mike, thanks for having me on.
Absolutely. So now you have three designations after your name: MSRE,
Yeah.
CCIM,
And
and SIOR.
yeah, so, let's talk the first one, MSRE, which is Masters of Science in Real Estate. I attended Johns Hopkins University right after my undergrad at American University in DC. I spent 2 years part-time obtaining that master's. I never thought I was going to be on the brokerage side. I think I wrote about it in one of my posts, like during Father's Day. I think you probably saw it. A lot of people others saw it too. I come from like a family office background, where, my father was a very successful, well, I wouldn't say was, he still is. Um,
We
he's a
don't
very
go away for us. We just get older.
he's a pretty successful entrepreneur in the, we like to call it the DMV area, which stands for DC, Maryland, Virginia. So if you ever heard about that before, like in the Mid-Atlantic states, that's what it's basically referred to. He started his career, immigrating here in the mid 80s, doing a bunch of oddball jobs. He ended up selling his dry cleaners in the early 90s, started doing check cashing. He was like the first one doing 1% fee service. He doesn't do any payday loans or anything. He wanted to do something to help out the community. He
Wow.
grew it to over 50 stores. We also have like about 30 some cell phone stores, about a dozen laundromats. So it was natural for him to, buy, pad sites, strip centers, shopping centers.
Absolutely.
When the '08 recession came in, he was buying limited service hospitality assets, 40 on the dollar. We grew it to like
Wow.
900 keys. We probably cut back a little bit, but that's all, like I said, in the DMV area.
So
And
so why the opportunity I'm sure was there to get involved in the family
yeah,
office?
yeah, but one is, you kind of don't want to live in your dad's shadow. The other thing was, getting into brokerage, it was kind of getting into it by accident. Um, I was just looking for a place to hang my license, collect like any fees if anything that wasn't mid-market, like, smaller deals that were like owner user deals for our businesses, collect the commission on top of that. I did my licensing course right after I graduated at a Coldwell Banker, and I finished, excuse me, and they were looking to grow it. It's a good mid-sized firm. They had no presence in DC. They gave me a really good opportunity. We had about 30 offices of residential in the Mid-Atlantic area, about 2,500 agents. I thought I did it as like a side hustle in the beginning. I didn't think it was going to turn into my career, where I was getting so much referral business. Now, it's funny how things like evolved. So originally I thought I was going to be a retail hospitality broker based on the upbringing I had.
Right.
Um, most of the referrals I got were actually office and industrial owner user buildings. So, you know, right before I left, CBC, my book of business was about 30-40% office, 30-40% industrial, and only 20-30% retail. The only retail I ever did was whenever a client sold like an owner user building, which was usually like an office building or an industrial space they had or a warehouse, and they needed to 1031 into a simple triple net deal. Most of those assets were typically absolute triple net retail assets. Um, and then again, the only other deals I might have done was, I did like a massive 500,000 square foot mall release up. Right before I left, I did manage to release all the big anchor spaces. So it went from a dead mall to, all the big box anchors refilled. Um, we'll get to the two other designations you mentioned. So CCIM, I had a mentor, Demerit. He's down in Florida. He used to be the managing director for CBC on the eastern half of the US. Went off to do on his own firm, but he would always tell me, like he was a CCIM. He really believed in the network and the referrals. And, since I was a master's from Hopkins with the real estate background, I was able to fast track it. I basically already submitted my portfolio from the family office work. I only had to take 103, took the exam, got it done within a year of my, practicing brokerage.
Wow.
And then, the SI award designation, during COVID, I'm sure everybody saw industrial was like the hot commodity. Nobody thought industrial was going to go through the roots where rents were going anywhere from 1.5x to 2.5x, in some places even 3x. And normally back then, industrial was, you get normal 3% rent escalations. I remember during COVID, rent escalations were going up to 5. And, even now, rent escalations, right before I left, are hovering around 4%. It's still a hot commodity. But let's talk about the segue. There is no industrial in the city. Let's face it. There's tiny pockets.
There's no industrial in Manhattan for the most part, but there
Yeah.
certainly are in the boroughs. But before we get to that, so you were obviously very successful
Yeah.
where you are. And most people will grow and develop and thrive in a market that they know, that they're comfortable with, that they've been successful in. You met, and I want to just get an understanding. So, you're obviously a great networker.
Yeah.
You're obviously good at business, and you can say, "Yeah, I am." That's fine. Yeah, I am.
I would like to think so.
Listen, I met you probably about a year ago, maybe a year and a
Yeah.
half ago at various events, and you were very friendly with Bob Knakal. I didn't realize that you had developed a relationship that was extremely strong. And how important is that in your business? Is that kind of networking, relationship building, really going out there, taking some risk, putting yourself out there.
Yeah. I mean, look, in commercial real estate, this is basically a relationship business. One of the things I did in broker training, which, at first I didn't believe until I started practicing, they always say like your ability to build relationships and be likable will trump any knowledge you'll have. And, at first I didn't believe it because I
And
was like, well,
you use the word Trump as just that was a throwaway line. You weren't being you
no,
weren't.
no, no, like, as in like,
No, I know,
this will trump this.
I know, I know.
Yeah, yeah. I didn't think, but, no, but like back then I thought, look, like, don't you want to hire the guy with like the most knowledge and they'll move it? But I've heard this saying multiple times, like people want to do business with who they like,
Yep.
um, who they can trust, like as an advocate for them. Look, the business has been so good to me. Um, I look at it as, treat people the way you want to be treated,
Percent.
if somebody needs help or they need a favor or they want to like pick my brain, look, I was always available, always willing to help out. And I think based on, giving so much, I received in the back end of it. I didn't expect it to, but you
It's
know,
interesting. So I'm the president of a group. I don't know, you've probably heard of it, BNI.
yeah.
So, their tagline is that givers gain, that, you think about others before you think about yourself, and that ultimately, everything goes full circle and you are rewarded by that. And that's exactly what you're talking about.
No, I think you're 100% right on that. Look, at the end of the day, if you just help out people, like share your wealth of knowledge, you're going to be on the receiving end of a lot of business because I think you're building trust, you're building that relationship. I had nothing to gain from sharing it, but a lot of people would refer me business like, oh, like you need to talk to Faraz, like he knows so much. And like maybe like I'm a little bit obsessive about like the industry. People will say like, why I work so much. I'm sure you've seen some of my posts like where like Sunday and I have my 6 screens, and like
Yeah.
some of the people say you work too much, or like you need to leave the office and go home. Well, I think if you truly enjoy what you do, then it's not really work.
Well, that's the old saying. I'm sure you've heard it many times in your life that if you love what you do, you don't work a day in your life.
Yeah. No, and that's
So,
exactly how it feels like. But to answer your other question about like, building relationship with Bob, I think I literally did a post on this. Was it Monday? Yeah, I think I did this Monday. Where people asked me, I take a bunch of phone calls on the weekend. I have a lot of people that hit me up on DM and they say, like, hey, I'd love some advice or anything. And I always tell people, look, I'm always available on the weekend. I can't really do it Monday through Friday. Mike, I'm sure like that's our prime time in the
of course,
industry.
of
But I
course.
tell people, look, I'm always happy to take a call like on a Saturday or Sunday. And I get asked a lot, like, how did I meet Bob in the first place? Like, you guys seem like you were longtime buds. And I said, like, well, not really, because we both started social media at the same time.
Ah,
Yeah,
I got to his growth on social media is epic.
yeah. No, it's I think that's where he ended up now with his own firm and everything. If you look back, I think like social kind of progressed to where he is now,
Right.
starting basically Massey Knackle 2.0.
So,
Uh,
so did you initially make contact with him through X?
no, it was LinkedIn. I wasn't an X guy, I was a LinkedIn guy.
Okay.
Um, we both started at the same time. And like I would see his posts, and he was always posting like these good case studies.
Yeah.
Like the case studies were by far my favorite. Like, a deal that he would sell and it would turn into like this massive development site.
His before and after pictures.
Yeah, the before and after pictures and the Knackle nuggets.
You
Like
know
that
what?
those were,
So just in my networking group, I
yeah.
have to provide a quote every week. And I
Okay.
can't tell you how many times the quote is one of those,
Really?
one of the knackle nuggets. And it's not copyright infringement because I told him and he said
Yeah.
it was fine.
Oh yeah, no. Bob says use it. Like I love if you use it.
Yeah.
So I started following him. I would always like comment on his posts. Like like I would ask questions. I remember like one time, like they were selling like a retail condo on Fifth Avenue, and I was just absolutely shocked how much price per square foot this condo was. I think it was like well over, like in the peak of the market, over 10,000 bucks a foot.
Right.
But like it's on the prime retail corner of the city.
Oh, no question.
Um, like, and then I remember one day he posted, he had Don Tedman, which is like strip mall guy, and
Yep.
Chris Powers in the map room, and he's like, I had a bunch of influencers in the map room today. And I've always been curious to see it. I think everybody kind of refers to it. If you don't know what it is, like you've been kind of living under a rock, but like I think this is probably the most famous room in our industry.
I agree.
Um, and I always wanted to see it. And the first time I actually met Bob in person wasn't until like literally just last year, like this around this time. I think it was like August 24th. But no, like we built a great rapport. You know, I
So
get
was
joked.
it, did you talk to him and he invited you up to see the map room?
No, I asked to go see it. He
Okay.
responded right away. You know, he said like, you know, during the summertime it's a little bit busy, but let's do it during September. I actually got to see a little bit early because I was like involved in the early stages of CCC back in DC, which is contractors, closers, and connections. And you know, I got to meet Bob, and it's funny because I posted the picture on Monday when I first met Bob. You know, one of the partners I brought up from DC, he's focusing on Northern Manhattan, building the Northern Manhattan map to finish the map of all of Manhattan. Justin Rice Moore, and you know, I show him the picture. And I said, like, I think I was a little bit starstruck. He's like, no, bro, you freaking froze when you met Bob. And it's funny because I post it looking back, like, you know, I'm working now at BKREA,
Yeah.
which again, I never thought in a million years I'd be up here. I had no intention of being up in New York. Um,
Listen, opportunity comes to those who seek it, right? So by
yeah,
being out there, you made the connections.
well, it was funny because you know, Mike, I know you know this, but like I get joked a lot on, you know, I go by a few monikers on, you know, social. One is it's funny. I don't think Mr. Anywhere counts anymore. I think it might be Super Commuter. But you know, I was like known as Mr. Everywhere because like during conference season, I would travel a lot. Like we meant like I'm going to Apex right after this. I'm going to be at a CREI summit next week in Atlanta. Week after that, C5 in Miami. Week after that in Houston for CCIM. 2 weeks after that in LA for SIOR, and a month after that in MosmoCon. Um,
Now the Moscow?
MosmoCon. So
Oh,
it's Rod
Massimo.
Santa,
Oh,
yeah,
oh,
yeah, Rod Santa
yeah, he's great,
Monaco,
man.
yeah,
Yeah, he's terrific. I had him on as a guest too.
yeah.
Um, and when you go to these conferences, what's your end game?
My belief is, look, you know, just like I network, you know, like going in DC or other places, you know, I'm a firm believer of like you never know where business comes from. You know, plant as many seeds as you can. You know, I use social, you know, I think before people used these regional national conferences to plant these seeds outside their market. But with social media, and this was the approach I had with social media, it's a way to build your presence outside of your market without you actually being at like certain events or whatnot. It's like the greatest reach you
100%.
have. I mean, look, I'm not super big on X and Instagram. I just started that maybe like somewhat late last year. But like I checked on my stats on LinkedIn, like last 365 days, 2.7 million impressions.
Right? That's
And
great.
it was with over 300,000 individual viewers, meaning 300,000 plus people have seen my post. And you know, I look at the stats, like it'll give you a breakdown of where people are. You know,
Right.
right now it's like hovering at like 15% in New York, 10% in DC, 7% in LA. But these are all people that are viewing it. So if you ever have to refer business, like, hey, like aren't you in New York?
And there's name recognition. You know, your name is not, it's a little, it's unique. You
Yeah,
know, it's not your, you know, it's not my name,
yeah,
but, you know, absolutely, you know, and, you know, between who you work with, you know, that is, you know, I was going to ask, that's got to be a huge door opener.
yeah. Well, it's funny. I made a joke. So my baby brother was interning at the shop over the summer, and you know he was seeing the guys in the cubes. Well, back then it wasn't even cubes. We were all in that one room that's like
Right.
less than 800 square feet, so you could hear everything. And I'm telling my baby brother, you know, I call my baby brother because like we have a 14-year age gap. And I said, you see all these people making calls, and usually their pitch is, hey, my name is so and so. I'm with Bob Knakал's office at BKREA. I said, Slar, you see this? Like nobody's hanging up or like, or
It's
basically like
true.
yelling curse
Right.
words.
Right. I mean, I can't tell you how many calls I get during the day, people I can't even understand calling from places I don't want to hear from, but
Yeah,
you're calling significant people in your industry with a unbelievably recognized and respected name.
Well, now it's interesting too, because I've the things I post. So before I moved up to New York, I was, like I said, I was known as Mr. Everywhere. It was funny. A lot of people assumed I was already in New York because of how many times I was already up here. I don't know. Maybe that was me subconsciously trying to get up here.
Could be manifesting.
Yeah, maybe I was manifesting, but no, like the things I post now, I try to, even though I go back and forth with DC and New York, I'm really not trying to pay New York taxes. That's the only reason I do it. All my family's there.
Then you shouldn't say that on something that's going to be like a permanent printed record. That you're
No,
not
no,
trying.
no, it's fine. I mean, because
It,
people ask me about it, and I said, like, I leave, I get in the city Monday morning, I leave Thursday evening, um, of course, and then the holidays and whatnot and conferences, and I did the math, and it worked out 171 days. I'll be in the city, so I don't have to
okay,
worry about it.
right.
But no, like family's still important to me. Like, coming up to New York, it wasn't so much the money, it was the opportunity to learn from the best. I mean, how many people can get an opportunity to work with a master in our industry?
Not
And
many.
so I told Bob, like, look, I just want to learn from the best. I'm not concerned about the money. I'm not concerned about the split. I told him up front, like, I'm gonna, like,
You didn't want a 90-10 split?
no, no, I'm good. No, I mean, come on, like the opportunity to learn from the absolute best. People would pay
Absolutely.
for that.
Oh, absolutely. No,
Yeah.
absolutely. No,
So
it was. Oh, go ahead.
yeah, so the way I look at it is, look, I was already maybe getting complacent in DC. Maybe I was getting bored. I wanted a challenge. Bob knew my office background in office and industrial and retail. He was telling me, well, we don't really have industrial in Manhattan. Like, it's really in the boroughs. But since you have all this office experience, there's a small retail component in all these office buildings. I'm going to have you focus on all the Manhattan office buildings in the city, which, I think that's a great challenge. I had somebody on LinkedIn made a joke. He was like saying, like, these are the people I follow on social media. And, Andrew Foster, he's a good buddy of mine. He works at one of the CMBS credit agency rating companies. Um, and he mentioned my name as one of the people he followed. He says, one of the guy, Faraz is a Manhattan office broker that's actually excited to work in the office market in Manhattan. and
So,
and I think it's I mean, look, we go through these cycles. It's I mean, look, there's never been a time where real estate has always gone up. Look, we've seen it during the S&L crisis, we've seen it during the '08 recession.
been
uh,
through them all.
I mean, look, we were long overdue for a reset. I mean, we went from what, '08 to COVID, where we saw a slight bump. That's what, 16 years?
It's a long time.
That's a long time. Normally, it's 8 to 10 years where there's going to be some kind of recession. Usually, it's not long, and then there'll be a recovery phase. What I think most people didn't expect was this whole work from home. Um,
No question. And
I,
zero interest rates.
like the interest rates have really messed up the industry. There's a difficulty of getting office tenants back in the city. I mean, a lot of
Yeah.
people are still remote. People that are going back into the office, they're looking at, class A product. They want the amenity space and
Oh yeah,
whatnot.
no, the B's and the C's are in a world of hurt. I used to own a commercial mortgage company, and I know that the CMBS market, just you financed into a 3% mortgage or a 4% mortgage, and now you're trying to refi into an 8% mortgage
Oh
with
yeah, it doesn't make
occupancy.
sense.
Right.
So while we have this up, I'm gonna pull up this sheet I have real quick, because like I literally, so like one of the good things about working with Bob is, I had to, like, literally the first 2 months, I had to research all the data from 2020 to now, of all office buildings, over 20,000 square feet. The reason we have that logic is Bob thinks anything under 20,000 is really treated more as a development site.
Okay.
So we looked at buildings below 60th Street, above 20,000 square feet, and reviewed the data. So like, let me pull it up to you. So like,
Now, is there do you guys have a program where you can put that metric in and it spits it all out?
no, I had to literally build a model and like, collect all the stats and everything. So just give you an idea. In 2020, all office buildings below 60th Street, above 20,000 square feet, was trading at $1,041 a foot. As of Q2 2024, that's $466 a foot. That is a loss of 55.2%.
Wow.
Now, just to give you more of a highlight, we had 3 transactions that happened this year. And we wanted to look at any of those deals where they were acquired within 10 years ago. So I actually have it up here. I'm going to give you the stats. So the first one we looked at was 5 East 59th Street. It was previously purchased in June 2015, and then it was sold again February 2028. The prior sales amount was 85 million, and then the current sales amount was just a little bit over 26 million. The percentage loss of that building was 68.61%. That's just the first one. Then we talk about 1740 Broadway. Again, December 2014, it was just a hair over $600 million. It traded in April for 185. That's a loss of 69.06%.
So who's taking the hit? Were there
It's all,
guarantees or the banks?
no, it's most of the ones that guaranteeing it. I mean, some of these end up in receivership and whatnot, but at the end of the day, most of these office owners are just trying to get out of. I mean, look, if they can get out of the asset and not, face foreclosure or bankruptcy, they'll do whatever they can.
Right.
I mean, it's just sad that, like, yes, like we're seeing a huge shift in the office market with declining values. I told you, on average, we've lost 55%. And then with these other trends we looked at, with the 3 buildings with the steepest decline, 68 to 70%.
Yeah.
But it also brings up opportunity, because think about it. I think that, with the city, they're trying to initiate a rezoning with the city of Yes, which we're all hoping it passes. We have almost 100 million square feet of empty office space in Manhattan. And look, it's going to fall into one of 3 buckets. The first bucket is people are going to buy this at a discount. Office rents are going to reset. I mean, look, office rents, like for BC, might have been trading anywhere from $60, $70 a foot. Now they're trading $30 to $40 a foot. I mean, look, I've seen buildings where they trade, like where the space was trading at, $25 a foot for the space. So that'll be one bucket. The second bucket will be any buildings that could be converted. So, we just put a listing out on 500 8th Avenue. It's literally the whole block front in between 35th and 36. Gross square footage is about 250 square feet, because it is also including 516 8th Avenue, which is owned by the same ownership. We developed, Bob's developed this team, which he likes to refer as the SWAT team. So, office and residential conversions can be a little bit tricky. We're not zoning experts. We're not engineers. We're not architects, but, we assembled a team where we have an architect, we have a data analyst, we have a cost estimator, we have a zoning attorney. They're doing all this work up front. Usually a buyer has to do that during due diligence.
So these guys on the team, on the SWAT team, they're doing the work pro bono in the hope that someone's going to come in and engage them to get the deal done?
No, we're compensating them up front. Like,
Really?
we have a deal structure with them.
Interesting.
But think about it, because most buyers are going to, they're going to need to do that, which costs a lot of money.
So you're providing an unbelievable service.
Yeah, so just to give you an example, this building that I told you is 250,000 gross square feet. Um, we did a few analysis. One is, there's two vacant floors on top. You can demo it. You can add 131 units. That will get you 330 plus ZFA, which if people don't know, I had to learn this. ZFA is zoning floor area. Um, the second scenario is there's a tenant that takes up the two floors below the vacant space. Now, in New York, which becomes a little bit of a challenge, is based on the zoning code and whatnot, you cannot have residential underneath commercial space. I know the city is trying to look at that and change the zoning where you could do that, but in the meantime, from what we've been told from the landlord, um, the current tenant, which is a school, may be willing to move. Of course, you're going to have to give them like TI incentives and whatnot to move into the two lower floors. Now, if you do that, you can then demolish four of the floors, not two of them, and you can build 171 units of rentals. And then the third scenario, this is where you can get 400,000 ZFA. You have to include the subway improvement permit, which, a lot of the subways were built. Mike, you probably know better than I would, but like this is before ADA compliance, right?
Right.
And the reason they have this permit out is, if you're near a subway and you can provide like an ability, like in your building, a common area space where like you can provide elevators and whatnot to make it ADA compliant. By giving up that space, you'll get an additional 20% FAR in your building. By doing that, from the last scenario I told you, instead of 171 units, you can go over 240 units.
Wow. And you run the numbers, you find the
Yeah,
feasibility of spending the money versus the extra output you're going to get.
yeah.
And if it makes economic sense, then somebody might buy it. But there are a lot of funds out there with a lot of money that
Yeah.
they've put together looking for opportunity. And I'm sure you guys are in contact with them, but are they still hesitant or are they ready to pounce on the market?
No, no, we're getting like, I mean, literally my phone was off the ringer this morning when so it went out yesterday, but I'm assuming a lot of people got back in the city today or they got back last
Yeah,
night. Um, no, I literally like just took three calls this morning before my 11 a.m. We're getting a lot of emails, a lot of big principals in the city are inquiring about it.
that's
Um,
great.
you
And what
know, like
about the funds, the PE funds, the Blackstones?
No,
Yeah,
we've gotten some funds. I can't mention names right now, like
yeah,
who's
of
looking
course.
at it. But no, we've gotten a lot of interest, but it all comes down to like A, does the economics work? B,
Right,
does the location make sense or not? C, does the price guidance make sense?
right. Yeah, yeah.
But you'd be surprised, in New York, there's always somebody that's willing to pay that primo dollar.
Abs-
Look, if you look at it based on a gross square foot basis, it comes out to like over 370 bucks a foot. But on a ZFA basis, it's 230 bucks a foot. I mean, that's not a bad deal for
No,
400,000 ZFA.
no. And when I go to events where Bob is the speaker, he's always talking about how these B's and C's are also probably worth the land.
That's exactly the point. And this gets into the third bucket, right? Because if you can't convert the building, I mean, like part of like converting a building is, you need a light air well, you need the height, the setbacks and whatnot, and you need the zoning. But if because again, we talked about the first bucket is you buy it as an office building, the rents reset because you bought it at a low basis. The second scenario is you can convert the building. The third scenario is I got to demolish this building and put something new
Right,
because nobody wants the existing. I mean, that's what we're going to see like in these three buckets. So
right.
look, with that, the market's going to reset, hopefully with interest rates coming down. I mean, one is, look, the cost of capital right now is so expensive.
Yep.
The deals don't make sense unless you get at a lower basis.
Hmm.
But fingers crossed that we start seeing rates go down. But the thing that surprised me the most about New York is I'm still surprised how much dry capital is sitting in the city.
Oh, it's it's absolutely massive. And you know
Yeah.
what else? I don't know if this surprised you about New York, but the $1 slice of pizza stores, they're no longer a dollar.
Yeah, so I've been curious. I've heard that's not usually the best place to get a slice, but I don't think I've seen a $1
I
slice of
know.
pizza since I've been here.
It's devastating, really. But I mean,
No,
listen, we have to end our conversation, but I would love to have you back, in 6 months or so, and really find out what's going on in your world
yeah.
and in the world of BKREA, because I have no doubt it's going to be massively successful.
I mean, look, this is an exciting journey. Bob's a good friend of mine. Really want to see him get to deal 3,000. I think that's our new goal now. I know, like,
Right.
of course we want to get over that, but I'm sure if you saw the video he posted yesterday, like Journey, like two more deals down to wrote to deal 3,000.
I mean, the numbers are so large, it's hard to comprehend, but I have no doubt if he puts his mind to it, few work as hard as he does, and, his connections are beyond. So I have no doubt that Bob, along with his new team, are going to succeed in
Yeah.
whatever it is they do.
Well, Mike, I
So
really appreciate you having me. Sorry we couldn't talk a little bit longer because I know we could go for hours.
absolutely, and you say hi to Bob when you see him today at the
Apex
at the
event.
Apex event.
Yep, I'll
Absolutely.
tell him you said hi.
All right, and I look forward to having you back.
All right.
Thank you for listening to Do You Ever Wonder? And we hope that you enjoyed the show. Next week, we will have another terrific guest telling their story. And if there are any specific topics you'd like to hear more about, please don't hesitate to let us know. Our curiosity, like yours, knows no bounds. Please subscribe and like and share this episode on your social media. See you next week.